Recognize and avoid these illusions to create wealth. At each stage of life, there are deceptive ideas that can leave you near broke or dependent on the government in retirement. You may already be looking back in time and acknowledge one or more of these investor myths. Successful investors have learned that it is important not to believe these myths that can keep one from creating wealth. Age 20 to 40 illusions. I need a large lump sum to start investing. It is more important to engage in a consistent retirement savings plan. Instead, try dollar cost averaging, a plan that allows you to buy more fund units when the markets are down and fewer when it is up. This helps you smooth the effect of the market fluctuations. Dollar cost averaging plans work well when trying to achieve long-term growth with equity funds. They tend to fluctuate more than other funds. As well, you can start with as little as $25 per month. I will wait until March to invest in my RSP. Investing in an RSP offers a significant tax deduction from your income and ongoing tax deferral on retirement savings. Some prefer to make lump sum deposits and others monthly contributions. However, if an investor is unable to make a lump sum deposit, there is always the option of using an RSP loan. This strategy allows a person to make the RSP deposit and receive a tax refund, though future monthly payments will be due to pay back the loan. Bear in mind that any income tax money saved can be used to help pay back the loan. Based on your financial situation, it may be wise to borrow for RSP purposes, or begin making monthly contributions for the next tax year. I keep investing my money in my own business. That's my best investment. This is the grand illusion of the self-employed. They can become so focused on their business that they forget to invest. Every business owner needs personal investments outside of the company. Consider segregated funds, which allow business owners potential creditor protection. Like everyone else, they must rely on time to invest and compound growth. Two universal laws of investing. Age 40 to 60 illusions. If I max my RSP, I'll retire wealthy. This will depend upon your age and how much you have already invested, and how the investments have performed. Additionally, consider investing outside of your RSP by using the tax-free savings account. As of 2013, people will be able to contribute $5,500 to their TFSA account. Depending on your goals and retirement objectives, you may need to plan for other income sources. If I can't retire at age 55, I have failed as an investor. Some enter retirement gradually, by remaining in the workforce on a part-time basis. Part-time working income can also help to preserve some of your RSP or RIF portfolio because you will need to withdraw less. By waiting to take your CPP and OAS later, you could achieve a higher pension income. The main question to consider is really, what does retirement mean for me? For some, it means having choices to do leisure activities. For others, it may mean the ability to go back to school, to travel, to get another job. Retirement at 55 really depends on your situation and what you wish to do after 55. Age 60 to 90 illusion. I'll live off my investment income and leave the principal to grow. This is rarely possible to achieve when retired. If your portfolio is registered, you will have to create an RIF by December 31st in the year in which you turn 71. In addition, With such low current interest rates, you may create little income in your portfolio. After you deduct the inflation rate, you may have a negative return. I don't know where time went. Many people will have very little money invested to live on in an increasingly expensive world. The main reason is that they never took it seriously when they were younger and had time on their side to invest and see the miracle of compound interest working. It is time to plan and act now to do what you need to do at whatever juncture of life you are at, to invest as much as possible to hit your retirement income target.
Talk to your advisor before making any financial decision. The publisher, Advice On, offers this service for educational purposes only.